If you've ever wondered why hedge funds can survive chaos while most traders get wiped out, it's not because they predict markets, it's because they build a machine. Hedge fund allocation strategies, risk limits, and hedges that keep them alive when the market turns. In this video, you'll understand what is a hedge fund, how do hedge funds find trades, and how to hedge in trading with simple examples you can actually use. So, what is a hedge fund? A hedge fund is a professionally managed pool of capital that can use flexible tools, long and short positions, options, leverage, and complex portfolio construction, aiming to generate returns while controlling downside. The key difference from a normal mutual fund is flexibility. Hedge funds can bet for or against assets, and they can hedge risk instead of praying. Most people think hedge funds win by finding secret trades. In reality, they win by position sizing, diversification across uncorrelated ideas, strict risk management, and hedging tail risk. Trade ideas matter, but survival engineering matters more. Now the real question, how do hedge funds find trades? Well, they don't rely on one signal. They build repeatable edges. Quant signals, trend, carry, value, momentum, and mean reversion. Fundamental research, earnings, supply-demand, balance sheet, and catalysts. Relative value, mispricings between related instruments. Volatility and option structures, pricing inefficiencies, skew and term structure. Flows and positioning, who is forced to buy and sell and when. Most funds don't want one perfect trade. They want many small edges stacked together. Think of it like a factory. Step 1, generate 1,000 ideas. Step 2, filter down to a manageable number, say 50. Step 3, stress test those 50 for worst-case scenarios. Step 4, size them so one mistake doesn't kill the year. Step 5, hedge exposures they don't want. This is why professionals obsess over process, not predictions. Let's talk hedge fund allocation strategies. Allocation is basically where should capital go, how much, and under what risk limits. A common professional framework looks like this: risk budget first, not capital first. Allocate across strategies, not just assets. Trend, momentum sleeve, mean reversion sleeve, macro, interest rate sleeve, volatility and options sleeve, event-driven sleeve. Set limits, max drawdown tolerance, max exposure per theme, max correlation across positions, liquidity constraints, stop rules and deleveraging rules. Retail often asks, which stock? Hedge funds ask, what portfolio behaves well in good times and bad times? Even if you buy good stocks, your portfolio is secretly driven by exposures like market beta, overall index direction, sector concentration, volatility exposure, currency and rates sensitivity, liquidity risk during panics. Hedge funds try to isolate the edge and neutralize the unwanted exposures. Now, how to hedge in trading without making it complicated. Hedging means reducing damage from the scenario that would hurt you most. 3 simple hedging methods. Position sizing hedge, reduce size so the worst case move is survivable. This is the cheapest hedge. Instrument hedge. If you're long a stock portfolio, hedge with an index short or protective puts. Options hedge. Use puts, put spreads or collars to cap downside. Important truth. Hedging is not free. You either pay with premium, options cost, or with reduced upside, collars or tighter hedges, or with opportunity cost, smaller size. The point is not to eliminate risk. The point is to avoid the risk that ends your game. Example, you're bullish but you fear a crash. A hedge fund style approach. Keep the core position smaller than what your ego wants. Add a defined risk hedge like a put spread. Set rules. If volatility expands, reduce gross exposure. If correlation spikes, cut weaker positions. Retail asks, will it crash? Professionals ask, if it crashes, do I survive? And can I buy more later? So now you know what is a hedge fund, how do hedge funds find trades, and the logic behind hedge fund allocation strategies, plus how to hedge in trading in a clean, practical way. If you want, I'll make a follow-up video showing a simple hedge fund style portfolio template for retail traders. Allocation, sizing, and 3 hedge setups you can copy. Comment hedge if you want that template.